There is one company on Earth that owns a piece of nearly every corporation you've ever heard of. Apple, ExxonMobil, JPMorgan, Lockheed Martin, Pfizer, Netflix. They are all in part owned by the same entity. It is not a government. It is not a country. It is a single asset management firm, and it controls more money than the GDP of every nation on Earth combined. Except two. Its name is BlackRock, and most people have never heard of it. Here's what they don't teach you in school. There are two kinds of power in this world. The kind that gets elected, and the kind that never has to be. BlackRock manages over $10 trillion in assets. Let that land. $10 trillion. That is not a number. That is a level of control so vast that the word investor doesn't even begin to cover it. When you pay rent, there's a chance BlackRock owns your building. When your pension fund makes a decision, there's a chance BlackRock is advising it. When your government needed to stabilize markets during COVID, it called BlackRock. Not the Treasury, not the Fed. BlackRock. This is not a conspiracy theory. This is a publicly documented reality that most people scroll right past because it doesn't fit neatly into a headline. Today, we're going to change that. Here is how one company quietly became the most powerful financial force in human history, and what it means for the rest of us. To understand BlackRock, you have to understand the man who built it. Larry Fink, 1988. He co-founds a small risk management firm out of a single room inside a private equity company called Blackstone. He had just come off one of the most embarrassing trades in Wall Street history, a miscalculated mortgage bond bet at First Boston that cost the firm hundreds of millions. He was humiliated, pushed out. Most men would have quit. Fink did the opposite. He became obsessed not with making money, but with understanding risk, specifically the hidden risk that no one on Wall Street was properly measuring. So he built a system, a software platform called Aladdin, the Aladdin Risk Management System. This wasn't just software. This was a machine that could analyze the risk inside a portfolio at a level of granularity that had never existed before. By the mid-90s, Aladdin wasn't just running BlackRock's money. Banks, insurance companies, pension funds, sovereign wealth funds, they were all paying BlackRock to run their risk calculations through Aladdin. BlackRock wasn't just an asset manager anymore. It had become the nervous system of global finance. Here's where it gets dark. The 2008 financial crisis didn't just collapse the global economy. It handed BlackRock the keys to the kingdom. When Bear Stearns collapsed, the Federal Reserve called BlackRock to untangle the toxic assets on its balance sheet. When AIG imploded, same call. When Merrill Lynch, Freddie Mac, Fannie Mae went off the cliff one by one, the U.S. government didn't turn to its own agencies. It turned to BlackRock. Because no one else had Aladdin. No one else could see inside those poisoned portfolios. And then, in 2009, BlackRock made the move that changed everything. It acquired Barclays Global Investors for $13.5 billion. That single acquisition gave BlackRock the iShares ETF business the largest exchange-traded fund platform on the planet. Suddenly, everyday people putting money into their retirement accounts, their index funds, their savings, were routing that money through BlackRock. Passive investing exploded, and every dollar that flooded into index funds fed BlackRock. Within a decade, they crossed $10 trillion in assets under management. For context, the entire U.S. federal budget for 2024 was $6.8 trillion. BlackRock manages more. Now here is where this story shifts from impressive to unsettling. Aladdin. Today, Aladdin doesn't just manage BlackRock's money. It manages risk decisions for institutions that collectively oversee roughly $21 trillion in assets. Think about that. A single, privately owned algorithm, owned by one company, is informing financial decisions across pension funds, insurance giants, and central banks simultaneously. When Aladdin says an asset is risky, trillions of dollars react. When Aladdin says it's safe, they pour in. This creates what economists call systemic correlation risk. If every major institution on Earth is using the same risk model, and that model is wrong, they all fail at the same time, in the same direction. There is no diversity of judgment. There is no second opinion. There is only Aladdin. And Aladdin has made mistakes before. In 2020, during the COVID crash, several models, including systems like Aladdin, massively underestimated how markets would move. Things happened that the algorithms said were virtually impossible. The question no regulator has been able to answer clearly is this: if Aladdin fails, what exactly fails with it? Here is the piece that most financial channels won't say out loud. BlackRock doesn't just manage money. It shapes policy. Larry Fink writes an annual letter to CEOs of the world's largest corporations. He tells them, not suggests, tells them to align with ESG priorities, environmental, social, governance, or else lose BlackRock's institutional support. That is not a shareholder. That is a sovereign. Now layer on the political revolving door. Brian Deese ran BlackRock's Global Sustainable Investing division, then became director of the National Economic Council under President Biden. Wally Adeyemo, BlackRock's chief of staff, then became the deputy secretary of the Treasury of the United States. This is not unique to one political party. This door swings both ways. When the Federal Reserve needed help buying corporate bonds in 2020, the largest market intervention in its history, it hired BlackRock to manage the program, buying bonds that included BlackRock's own funds. The conflict of interest was documented, reported, and then largely forgotten, because when you are $10 trillion large, you don't fear consequences. You are the consequence. And then there's housing. After 2008, when millions of Americans lost their homes, institutional investors, many advised or managed by BlackRock-affiliated entities, swept in and purchased those foreclosed properties at rock-bottom prices. Single-family homes, neighborhoods, block by block. By the early 2020s, institutional investors owned hundreds of thousands of single-family homes across the United States, charging rent to the same families who had been priced out of buying. The American dream: own a home, build equity, leave something for your children, was being quietly converted into a rental income stream for institutions. BlackRock has repeatedly denied being a major single-family homebuyer directly, and technically on a percentage basis they're right. But their funds, their clients, their strategies, the fingerprints are everywhere. So where does this leave us? BlackRock is not evil in the way movies portray evil. There is no villain in a dark room. It is something more complicated, more modern, more dangerous. It is a system that has become too large to be properly checked by any government, too embedded in global finance to be allowed to fail, too influential in policy to be treated as a neutral actor. And yet it operates as a private company, accountable to its shareholders, not to you. The EU has begun investigating the systemic risk Aladdin poses to European markets. U.S. senators have called for BlackRock to be designated a systemically important financial institution, which would trigger far greater regulatory oversight. Larry Fink has pushed back. Hard. Because when you are the infrastructure, you don't want to be regulated like a utility. But here is the uncomfortable truth underneath all of this. The age of nation-state supremacy may be quietly ending, and what is replacing it is not another government. It is a network of asset managers, algorithms, and capital flows that no one elected, and that most people can't even name. BlackRock is not the only one, but it is the largest, the most connected, the most consequential. And now, you know its name. The question isn't whether BlackRock is good or bad. The question is this: in a democracy, who gave $10 trillion a vote? If this changed the way you see the financial world, share it with someone who needs to. Subscribe if you want to go deeper, because next time, we go inside the machine that BlackRock fears most. You won't want to miss it.